Until March 10, 2023, Silicon Valley Bank was the 16th largest bank in the U.S., worth more than $200 billion. This week has seen major trouble for financial institutions tied to innovative and forward-looking sectors of the economy. Silvergate Capital, a holding company for a bank that since 2016 had bet big on servicing the emerging crypto economy, announced Thursday that it will wind down bank operations. Silicon Valley Bank, SVB, which has long played a similar role in managing money for venture capital-funded startups, was shut down by state regulators Friday. What happened to SVB? As the preferred bank for the tech sector, SVB's services were in hot demand throughout the pandemic years. The initial market shock of COVID-19 in early 2020 quickly gave way to a golden period for startups and established tech companies, as consumers spent big on gadgets and digital services. Many tech companies used SVB to hold the cash they used for payroll and other business expenses, leading to an influx of deposits. The bank invested a large portion of the deposits, as banks do. The seeds of its demise were sown when it invested heavily in long-dated U.S. government bonds, including those backed by mortgages. These were, for all intents and purposes, as safe as houses. But bonds have an inverse relationship with interest rates. When rates rise, bond prices fall. So when the Federal Reserve started to hike rates rapidly to combat inflation, SVB's bond portfolio started to lose significant value. If SVB were able to hold those bonds for a number of years until they mature, then it would receive its capital back. However, as economic conditions soured over the last year, with tech companies particularly affected, many of the bank's customers started drawing on their deposits. SVB didn't have enough cash on hand, and so it started selling some of its bonds at steep losses, spooking investors and customers. 2 days after it announced it would raise capital, the $200 billion United States dollars company collapsed, marking the largest bank failure in the U.S. since the global financial crisis. It took just 48 hours between the time it disclosed that it had sold the assets and its collapse. Effect on crypto industry. While the repercussions of Silicon Valley Bank's failure will be felt across the tech industry, the crypto markets are already feeling the effects. As of the publishing of this article, USDC, the second largest stablecoin, has lost its $1 peg and has yet to recover. It fell as low as 89 cents at one point. It's unclear what the future of cryptocurrency holds at the moment. We all hope for the best. This is Poor Gracias channel. Do not forget that we will be bringing you the best of the best. Kindly like, subscribe, and share. Thank you so much for watching. Stay safe and see you in our next video.